Hello, and welcome to this online resource on climate resilience and climate-related scenario analysis within AASB S2. My name is Emma Carpe. I'm from Ernst & Young, and I specialize in climate-related financial disclosures and sustainability reporting requirements. Scenario analysis is a central requirement of AASB S2, and it's designed to help organizations assess the resilience of their strategy. This session content ties into our practical experience on this topic based on professional exposure and knowledge on the subject matter. The session is designed to support entities in the preparation of AASB S2, focused on climate resilience and scenario analysis. It's forming part of AASB's broader implementation to support the implementation of the standard. Our agenda for today is here on the screen. We'll be working through a couple of key priorities. First, we'll set out the context, and here we'll discuss the objectives of the session along with what won't be covered. We'll then cover the overview of scenario analysis and AASB S2 requirements. After this, we will discuss some practical steps and approaches to scenario analysis and outlining different ways to conduct each step. Lastly, we'll have an overview of reassessment, disclosure, and documentation considerations before having a short conclusion from myself and then the AASB. We'll be working through the following learning objectives. By the end of this session, you will be able to explain what climate-related scenario analysis is and why it is required under AASB S2, recognize some of the minimum expectations, understand the different ways organizations could approach scenario analysis, but moreover, be more confident and to explain the implications of AASB S2 within your business and next steps towards building climate-related scenario analysis for your organization. There are also some topics that are out of scope for today. Those include the Corporations Act requirements, ASIC's regulatory guide, all other uses of scenario analysis, for example, for initial climate-related risk and opportunity identification, or the quantification of anticipated financial effects. Also outside of scope are the assurance requirements. We recognize that this is an ambitious topic for a limited amount of time, and also acknowledge that there are diverse levels of experience in this subject matter. So we've really designed this session to be practical, accessible, and valuable for all participants, regardless of what your starting point is. Now, let's deep dive into an overview of climate resilience and climate-related scenario analysis within AASB S2. The purpose of scenario analysis is to explore how your business and strategy may perform under different plausible future climate conditions. Scenario analysis is a very helpful tool for an organization to explore, and it supports thinking about its identified climate-related risks and opportunities over the short, medium, and long term, and how these may affect organizations. Scenario analysis helps organizations to navigate the uncertainty about the future by considering what if this happens situations, and by exploring a range of plausible futures rather than attempting to predict specific outcomes. There are a couple of key components when it comes to climate scenario analysis. The first one is time horizons. Short, medium, and long-term time horizons can vary between entities and depend on many factors, including industry-specific characteristics, such as cash flow, investment, and business cycles. The planning horizons typically used within an industry for strategic decision-making, capital allocation planning, and the time horizons over which users of the general purpose financial reports conduct their assessments of entities in that industry. For example, some impacts, such as policy changes, could occur quickly in the near term, while physical climate change effects typically manifest and intensify over the longer term. While AASB S2 does not prescribe any specific time horizons, it does require you to define your short, medium, and long-term time horizons and to explain how these definitions relate to your strategic planning horizons. Then there's the scope. AASB S2 requires you to determine and disclose the scope of operations used in the analysis. This includes your operation locations, business units, and this should include your considered value chain. Some data inputs may be more certain for specific components, or certain areas of your business may be more exposed or have a greater uncertainty. In considering the scope, the entity shall consider all reasonable and supportable information available to the entity at the reporting date without undue cost or effort. Taking into account the objective of paragraph 22, this also means that the inputs to the entity's climate-related scenario analysis shall be relevant for your circumstances. For example, to the particular activities the entity undertakes and the geographical locations of those activities. Lastly, there's a consideration of the number and diversity of scenarios. The Corporations Act does specify the minimum requirements relating to climate-related scenario analysis in Australia, which includes assessing both a high global warming scenario and a low global warming scenario. There's no fixed answer for how many scenarios might be most useful or appropriate to use for your entity. Instead, consider a range of scenarios that challenges your thinking about how your business might perform under different circumstances. When selecting scenarios, variables, and other inputs to use in your climate-related scenario analysis, an entity might, for example, use one or more climate-related scenario analysis, including international and regional scenarios that are publicly and freely available from different authoritative sources. To inform your scenario analysis, you can draw on publicly available reference scenarios, such as those from the Intergovernmental Panel on Climate Change, or the IPCC, the International Energy Agency, or the IEA, and the Network for Greening the Financial System, or the NGFS. These sources provide datasets and scenario pathways relevant to various sectors. Additionally, drawing on or developing your own datasets tailored to your company and value chain might help to ensure that your analysis is context-specific, providing relevant insights about the resiliency of your strategy and business model. Frequently raised question concerns the distinction between qualitative and quantitative approaches in scenario analysis. It is important to differentiate between the scenario analysis approach itself and the types of data inputs used for the analysis. We will cover the data inputs in section 2. For approaches, it is wise to consider that both qualitative and quantitative analysis methodologies can reinforce each other. For instance, numerical climate risk models can identify where risk exposures may accelerate under different scenarios. However, consider overlaying these quantitative model outcomes with expert qualitative judgment to really interpret the results within your broader business context. This supports the idea that scenario analysis remains a tool for strategic thinking, rather than being a rigid forecast. It is important to understand that under AASB S2, it's not a requirement to disclose your scenario analysis results. Expert judgment and strategic interpretation are encouraged, recognizing that model outputs are always based on assumptions and always require careful consideration before influencing strategic decision-making. This interplay between qualitative and quantitative approaches can be observed already across all different areas of risk, such as operational, credit, liquidity, and now also climate risk. Now, let's look at the different approaches available. Qualitative approaches. Qualitative approaches to scenario analysis are primarily narrative-based. These approaches focus on describing how your organization's strategy and business model might be affected under different climate-related scenarios at a qualitative level. Climate scenario narratives provide an overview of possible future circumstances and highlight the changes that may arise under each scenario. It's very common for organizations to already undertake qualitative risk analysis for other risk types, which might mean that you will be able to leverage your existing enterprise risk management framework to support your climate-related scenario analysis. For instance, A risk matrix that considers various risk dimensions, from financial impacts to reputational or other qualitative factors, can be very useful in determining your risk exposure. Typically, these qualitative analyses are conducted through workshops, ensuring a broad range of perspectives are captured. While qualitative approaches are inherently narrative-driven, they may still incorporate certain quantitative data points to inform the analysis. The integration of both types of information will be discussed further when we're considering scenario analysis inputs. Now let's look at quantitative approaches. At the other end of the spectrum are quantitative approaches, which use models to assess the implications of climate-related risks and opportunities. Quantitative scenario analysis might involve modeling the effects of physical and transition risk over the short, medium, and long-term time horizons. This approach could provide dollar estimates of potential impacts under these different scenarios and timeframes. However, it is important to note that these figures are not necessarily predictions. They're based on hypothetical constructs and serve to indicate areas of possible exposure, rather than providing precise information about future costs associated with your identified climate-related risks and opportunities. In practice, many organizations adopt a blended approach, combining both qualitative and quantitative elements. Certain aspects of climate-related risks and opportunities may be quantifiable, while other aspects, or other risks entirely, may only be addressed using relevant qualitative information about how those risks could emerge. Now, where does scenario analysis fit within AASB S2? Scenario analysis is required to be used to inform an entity's climate resilience assessment within the context of the identified climate-related risks and opportunities. AASB S2 only requires climate scenario analysis to be used as an input to the assessment of climate resilience. There are other areas in the standard that also mention climate-related scenario analysis, though. That includes, for example, the risk management section on whether and how scenario analysis is used to inform risk identification, and also within the metrics and targets requirement to disclose whether and how a carbon price was used in scenario analysis. While this session centers on the core requirements of scenario analysis under S2, it is important to recognize that investing in scenario analysis for other uses could yield significant additional value for your organization. So, when we look beyond the mandatory elements, scenario analysis can help prepare for other areas of your disclosure. For example, scenario analysis is a great tool to deepen your understanding of your entity's exposure to climate-related risks and opportunities. So although the use of scenario analysis to, for example, inform your anticipated financial effects or your risk identification is not mandatory, it can serve as a really valuable tool for estimation and understanding these elements. When thinking about these different additional and relevant uses of scenario analysis, consider these in the context of paragraph 21 of Appendix D. This paragraph discusses the concept of connectivity within your climate-related financial disclosure. This concept can be really helpful, for example, when you are considering an approach for the cross-industry metrics on vulnerability or other areas of your climate disclosure. So when we zoom out and look at where scenario analysis fits in AASB S2, it's important to understand that although scenario analysis can inform those multiple parts of your disclosure, it is only required as an input for the climate resilience assessment. And it is optional, but can be helpful elsewhere, such as your risk identification, metrics, and anticipated financial effects. Using scenario analysis more broadly could reduce your operational burden and improve the internal consistency of your disclosure. AASB S2 expects climate-related scenario analysis to be applied in a way that is practical, proportionate, and decision useful, rather than technically perfect. Key principles reflected in the standard include analytical choices, such as the selections of time horizons and the scope, are crucial in establishing a robust scenario analysis framework. Be mindful that AASB S2 does require you to disclose information about the inputs and the key assumptions used in the analysis. Selecting appropriate inputs is a key consideration for both qualitative and quantitative scenario analysis. Inputs themselves may be qualitative or quantitative in nature. The parameters and assumptions chosen will help shape how the scenario analysis is tailored to your organization. Assumptions depend on the specific context and nature of the identified climate-related risks and opportunities. For example, the price of key commodities or products, information which may be available internally, can be influenced by climate dynamics and could be considered as a relevant input. Although AASB S2 does not prescribe the use of specific scenarios, keep in mind that the Corporations Act specifies the minimum use of scenarios. However, AASB S2 requires entities to have a reasonable and supportable basis for using a particular scenario or set of scenarios, where appropriate diversity to inform resilience is an important factor. Closing off the first section, let's talk a little bit more about scenario analysis versus a resilience assessment. So when we're considering scenario analysis, a guiding question might be, what could happen to our business under different climate scenarios? In contrast, a resilience assessment focuses more on the organization's response, asking, if these futures were to eventuate, what is our capacity to adjust our strategy and business model to these potential climate-related changes, developments, and uncertainties? So while scenario analysis is the tool, the climate resilience assessment is the outcome that is disclosed. In other words, a resilience assessment is management's assessment of a range of plausible but uncertain climate outcomes, detailing the implications for the entity's business model and strategy and its capacity to adapt and respond. Scenario analysis is the analytical exercise used to inform that assessment. AASB S2, as we mentioned, does not require an entity to disclose the results of the scenario analysis. Instead, AASB S2 does require disclosure of information about the approach the entity used to carry out the analysis and disclosure of the inputs and the key assumptions. Using a range of plausible but uncertain climate outcomes, management assesses the implications for its business model. Climate-related developments or uncertainties might include evolving macroeconomic factors, such as regulatory responses and demographic shifts. For example, regulatory limits on the use of fossil fuels. Climate-related uncertainties might include confidence intervals associated with climate-related changes and climate-related developments. For example, its assumptions about the pervasiveness of wildfires. Elements of a resilience assessment are potentially and probably already inherent to your business strategic operations. The information that informs resilience assessment is partly derived from climate-related scenario analysis, but you may also consider other inputs, such as your potential transition plan, internal documentation, or expert judgment. The entity shall, at a minimum, update the climate-related scenario analysis in line with its strategic planning cycle. However, the assessment of an entity's resilience is required to be carried out annually to reflect an updated insight into the implications of climate uncertainty. As such, an entity disclosure in accordance with paragraph 22A, the results of the entity's resilience assessment, shall be updated at each reporting period. Further discussion on these topics and the practical approaches to scenario analysis and resilience will follow in the next section. Practical steps to climate resilience and climate-related scenario analysis. On this slide, you'll see an example of a step-by-step approach to scenario analysis and resilience assessment. Let's run through this one by one. Step 1 is getting the basics right. This is about establishing a robust foundation, and it's crucial for effective scenario analysis. The steps involve 3 core components: defining the scope, setting appropriate time horizons, and engaging relevant stakeholders. Step 2 is about inputs and assumptions. The focus is on identifying and clarifying the inputs and assumptions that underpin the scenario analysis. This involves considering both those quantitative and qualitative inputs, as well as recognizing the importance of sourcing these from both internal and external channels. By acknowledging the practical implications of using both a mix of quantitative data and qualitative insights, organizations could ensure that their scenario analysis is more robust and grounded in relevance and context-specific information. Step 3 is on selecting the analysis approach and the execution. Once the input and the data sources have been selected, the next steps involve determining the most suitable analysis approach and carrying out the scenario analysis. All of these combined will lead into your resilience assessment, which involves interpreting the results from your scenario analysis. This interpretation is critical for understanding the implications for organizational strategy and for evaluating your capacity to adjust and adapt over time. As highlighted previously, this process supports the ongoing assessment of how well an organization could respond to various climate-related futures, supporting the idea that strategic planning remains dynamic and responsive. All of these steps above result in an essential output, the climate-related financial disclosure. These disclosures provide transparency and support informed decision-making by primary users. A brief overview of the disclosure requirements will be covered later. Before we move on, it's important to note the role of judgment and to consider and appropriately document your judgments, assumptions, and uncertainties. For example, judgments regarding the potential benefits of different approaches to climate-related scenario analysis. Organizations are encouraged to exercise judgment to ensure that their scenario analysis and related disclosures are both meaningful and fit for purpose. In this judgment, it is important to understand the two primary aspects of its circumstances: the degree of your entity's exposure to climate-related risks and opportunities, and the skills, capabilities, and resources available to you to conduct climate-related scenario analysis. Now, let's deep dive into each of the steps. We'll start with step 1, getting the basics right. Entities should carefully consider the boundaries of their scenario analysis. Information sources may both be internal, they can be external. The selection should be relevant and diverse scenarios. It's critical for meaningful analysis. By understanding the requirements and available resources, organizations can develop robust scenario analysis frameworks. Let's start with defining the scope of the analysis. In applying AASB S2, entities are required to define the scope of the analysis by considering the reporting entity and your value chain, and by identifying climate-related risks and opportunities. Any exclusions from this scope should be considered and transparently disclosed, as they may affect users' understanding of both the current and anticipated effects of the identified climate-related risks and opportunities. Secondly, it's important to determine your time horizons. Companies' definitions of short, medium, and long term, as we said, can differ, depending, for example, on the sector or your financial and business planning cycles. Additionally, it is really important to think about how climate trends, including both physical and transition impacts, may evolve over time. This enables the organization to explore uncertainties and understand potential exposures across different timeframes. Engaging your stakeholders. Stakeholder engagement is essential throughout the scenario analysis process. Involving a diverse range of perspectives ensures a more comprehensive understanding of your risks and opportunities. Stakeholder input also enables the organization to leverage internal resources and available data sets, strengthening the quality and the relevance of your analysis. Various internal functions and data sources within the organization can provide very valuable information and insights. For example, a diversified infrastructure entity undertaking scenario analysis may evolve in its assets operations team, its finance, strategy, risk, and procurement teams. The operations team could identify which assets and geographies are mostly exposed to physical risks and provide asset-level data on utilization, downtime, and maintenance. The strategy team can interpret how transition pathways, for example, a 1.5-degree aligned scenario, may affect long-term demands, while the finance team can translate these estimations of exposure into potential implications for cash flows and funding costs. Risk and compliance teams can support in understanding the outputs with regards to the entity's enterprise risk management processes. And procurement can contribute insights on supplier exposure within the value chain. Together, all of these inputs enable the organization to use the reasonable and supportable internal data, supplemented by external scenario datasets over the time horizons considered. Step 2, selecting the inputs. Selection of appropriate data inputs is another critical step that requires careful judgments. Likely, your inputs will include a mix of qualitative and quantitative data, internal and external data sources, but also historical, present, and forecasting data. It is important to note that all selected inputs need to be reasonable and supportable. This may entail drawing on information about historical events, present conditions, and future forecasts or estimates. The objective is to ensure that the scenario analysis is grounded in credible and relevant information, providing a solid basis for understanding and addressing climate-related risks and opportunities. Quantitative information will often enable an entity to carry out a more robust assessment of its climate resilience. However, qualitative information, including scenario narratives, either alone or combined with quantitative data, can also provide a reasonable and supportable basis for an entity's resilience assessment. For example, quantitative internal inputs could include historical energy consumption, fuel and production volumes, and site-level operating costs. These could be combined with external scenario-based assumptions, such as projected carbon prices, electricity grid decarbonization pathways, and temperature projections. To complement this, the entity may use qualitative inputs, including scenario narratives describing how policy tightening under a disorderly transition could affect customer demand or supply chain availability. But management may further rely on qualitative information informed by historical weather disruption event, current exposure mapping, and expert judgment. Altogether, these inputs would need to provide a reasonable and supportable basis for the assessment. Over time, as data availability improves, the entity can progressively enhance the level of information. Step 3, determining your analysis approach and execution. So once the inputs and the data sources have been selected, the next steps involve determining the most suitable analysis approach and carrying out the scenario analysis. The approach taken can vary significantly depending on your organization's context and the available information to you. So careful consideration is required to assess whether a qualitative, a quantitative, or a blended approach might be most appropriate. As previously discussed, selecting or balancing between a qualitative and a quantitative approach depends on the nature and the relevance of the available inputs. Some aspects of your scenario analysis may be examined through a qualitative assessment, particularly when your data availability is limited or when uncertainties are high. Other aspects, where more robust data exists, can be quantitatively assessed to provide more precise insights. More often, a combination of both methods is used. Qualitative analysis may be supported by relevant quantitative data points to strengthen the overall assessment. Executing the scenario analysis requires an understanding of how global climate trends interact with your organization and your value chain. Many external climate scenarios present high-level trends, such as global warming or melting ice caps, which may be challenging to translate into your organization's specific context. Mapping these global features to national and potentially local contexts is crucial. For example, global carbon budgets set the parameters for physical impacts and warming, which then can be interpreted at the national level through targets, such as Australia's net zero target by 2050. States and territories may also set their own targets, influencing how they decarbonize. These variations affect organizations differently depending on your geographical location and operations. It is essential to consider how the global context shapes national and local contexts, and how these in turn interact with your specific company, operations, and your value chain. Not all organizations will be affected in the same way by global scenarios. Some impacts will be highly relevant to certain sectors and regions, while others may not apply. Mapping out these interactions forms a key component of robust scenario analysis, helping your organization to understand which trends and scenarios are most relevant to your operations. Scenario analysis reveals that identified risks and opportunities may behave differently across varying climate scenarios. This insight is crucial for understanding how risks and opportunities could change depending on the climate scenario being considered. Such variability necessitates careful consideration of outcomes, enabling primary users of reports to understand the organization's capacity to adjust and adapt. AASB S2 requires entities to address this adaptive capacity. Organizations are required to include information on their capacity for adjustment and adaptations within their resilience assessment. This encompasses the flexibility of financial resources and the ability to redeploy, repurpose, upgrade, or decommission assets, and the effects on both current and planned investments. These should all be clearly articulated. It is essential to disclose the areas of uncertainty arising from scenario analysis, as climate-related scenario analysis inherently involves uncertainty and judgments rather than precise predictions. The degree of strategic response and capacity for adjustment and adaptation is a matter of judgment, so this should also be clearly considered, disclosed, and documented. Now, resilience assessment is relatively new for many organizations, and so it is increasingly being tailored to an individual organization context. The following examples could illustrate how organizations might articulate their resilience strategies. First, imagine having a potential supply chain disruption due to physical risk. Within your high emission scenarios, it may reveal increased production interruptions in your upstream value chain. Management might respond by enhancing supply chain diversification, reallocating liquidity buffers to exposed operations, or strategically exiting certain geographies over the next 5 to 10 years. These actions can strengthen organizational resilience in response to the identified exposures within the scenario analysis. A second example might be on the changing customer demand for high emission products. Your scenario analysis under the low emission scenario may indicate declining demand for your high emission products. As a strategic response, organizations may increase their capital allocation towards lower emission products or demonstrate financial flexibility to reallocate your capital as necessary. These decisions reflect a strategic response relevant to your entity's assessment. Resilience considerations arising from scenario analysis focus on strategic and financial planning and the flexibility within those. The assessment is not about assigning probabilities, but it's about determining what makes sense for your business in light of its identified exposures and interpreting the scenario analysis outcomes. Reassessment, disclosure, and documentation considerations. After discussing our practical steps, let's discuss some of the considerations of reassessment, disclosure, and documentation. Scenario analysis is an evolving practice, and therefore the approach that your entity uses is likely to change over time, and it's based on your particular circumstances. It is important to understand that scenario analysis is required to be reperformed at a minimum in line with your strategic planning cycle. This, for example, could be every 3 years. But this also means that some of the disclosures under paragraph 22b on scenario analysis could remain unchanged from previous reporting periods. However, an assessment of the resilience is required to be carried out annually to reflect those updated insights of the implications of climate uncertainty for your entity's business. The approach ensures that strategic responses remain relevant within the climate development of the reporting period. AASB S2 and application guidance specify that organizations should carefully consider their circumstances each time a scenario analysis is performed. Therefore, the approach might not be static. Rather, it should evolve as your exposure to climate-related risks and opportunities might change, but also as your internal skills and resources might develop. Early-stage scenario analysis may be simpler, providing those foundational benefits, while increased exposure or capabilities may justify a more technically sophisticated approach. An important consideration is the appropriateness to your specific circumstances. Then lastly, let's look at some of the documentation and disclosure requirements. It is important to clearly disclose the key inputs and assumptions used in scenario analysis so that users can understand how the analysis was constructed and how sensitive the outcomes may be to judgment. As uncertainty increases over longer time horizons, documenting judgments becomes critical. To help primary users understand why particular approaches, assumptions, or simplifications were considered to be reasonable and supportable. And lastly, maintaining robust records might be useful to consider this beyond assurance. Proper documentation can support your internal governance and consistency over time. It also supports the ability to explain and evidence your decisions in preparing for AASB S2. Let's move into our conclusion. To wrap this up, we want to return to our learning objectives and reflect on what we hope you take away from today's session. Firstly, we hope you understand more on what climate scenario analysis is, why it is required under AASB S2. We hope that you can recognize some of those minimum expectations and understand some of those different ways that scenario analysis can be approached by different organizations. And lastly, we hope you're feeling more confident and empowered to explain some of those implications of scenario analysis within your business and understand the next steps towards building climate scenario analysis for your organization. Thank you so much for joining us. Whether you are just starting or are building on existing work, we sincerely hope that this session has given you some of the practical clarity and confidence to move forward with climate-related scenario analysis under AASB S2.
Thank you, Emma, and hi, everybody. My name's Jack Bissett, and I'm the Climate Implementation Lead at the Australian Accounting Standards Board. My job today is to explain how this video fits into the AASB's broader work program to support the implementation of AASB S2. This slide provides an overview of our AASB S2 Knowledge Hub. You can get access to this using the link or QR code on the screen. And this is our repository of relevant resources and information that may assist preparers looking at preparing against AASB S2. So if you haven't done so already, please do check out our AASB S2 Knowledge Hub. Through the Knowledge Hub, you'll be able to get access to a range of written educational materials. These are materials we've been developing over the past 18 months and uploading to the Knowledge Hub. You can see the list there of the topics that we've been covering, and there'll be more to come in due course. The one at the bottom there, climate-related risks and opportunities and the disclosure of material information. This is one we released most recently and may be of interest if you haven't checked this one out already. Another part of our Knowledge Hub that I'd encourage you to have a look at is the additional resources page. This page provides access to a range of resources from across the Australian public sector, and these may be relevant as part of your scenario analysis. Another important part of our implementation work program for S2 is our Implementation Advisory Panel, or IAP. The role of the IAP is to consider implementation questions about the standard. It's a group of around 15 people and made up of a diversity of perspectives that you can see here. If you do have an implementation question about the standard, then you can find our submission form on the Knowledge Hub. And if your question meets the criteria, it will be considered by the IAP. We've also provided links to some other relevant resources. I won't go through the whole list, and many have been covered and mentioned by Emma already earlier in the presentation. But here we have some materials available for the IFRS Foundation. Also covered the TCFD, relevant resources from UNEP-FI, WBCSD, and yes, again, Emma touched on those major players globally in the scenario analysis space, NGFS, IPCC, and the IEA. So thanks again for watching the video today. I really do hope that you've found this useful and better understanding climate resilience and climate-related scenario analysis in the context of AASB S2. I've only got 2 more requests for you. If you haven't already done so, please do subscribe using that QR code in the top left-hand side. That's to our new Sustainability FYI newsletter, which is the best way to keep in touch with relevant developments from the sustainability reporting team at the AASB and our implementation support work program for AASB S2. And of course, follow us on LinkedIn, is the QR code on the right-hand side. So thank you again. Please have a great day. Thanks for joining.